As whispers of a US Federal Reserve rate cut grow louder, financial markets are beginning to stir. For many investors, especially those navigating the crypto space, this shift signals more than just a policy change. It marks the return of liquidity, risk appetite, and speculation. But while the headlines often focus on Bitcoin or major altcoins, this cycle might offer something different. This time, it might be Radiant RXD's moment. When central banks lower interest rates, borrowing becomes cheaper, liquidity floods back into markets, and capital begins to rotate out of safe assets like cash or bonds and into higher risk opportunities. Tech stocks, emerging markets, and yes, cryptocurrencies. This isn't a new story. Crypto has a well-documented history of surging during periods of monetary easing. In 2020, when COVID-19 spurred massive stimulus and near-zero rates, Bitcoin hit new all-time highs. In 2019, even a slight dovish tone from the Fed sparked rallies across the digital asset space, and with predictions of a rate cut on the horizon, the setup looks familiar. Except this time, the crypto landscape is different. The flashy narratives are fading, AI tokens come and go, meme coins burn hot and fast. Now more than ever, people are looking again at fundamentals. And when they do, proof of work begins to shine again. In a world awash in printed money, proof of work, POW, stands in sharp contrast. It doesn't rely on speculation or staking games. It's secured by real-world energy backed by computational effort and resistant to centralization. Unlike proof-of-stake systems that offer concentrate power, proof-of-work networks reward work, not wealth. Bitcoin has proven that proof of work can serve as a hedge against monetary expansion, a kind of digital hard money. But what happens when we need something beyond Bitcoin? Something that's still proof of work but also programmable. Something that offers fair issuance but also lets developers build. That's where Radiant quietly makes its case. Radiant is a proof of work blockchain launched with no pre-mine, no venture capital, no developer tax, and no token allocations. Every RXD in circulation was mined fairly, just like Bitcoin in its earliest days. But Radiant goes further. It supports Turing-complete smart contracts native with token minting and powerful scripting without relying on bridges, wrapped tokens, or layer 2s. Its emission curve is aggressive and front-loaded. Over 64% of its total 21 billion RXD supply is already in circulation, and more than 90% will be mined by 2030. With a 2-year halving schedule, Radiant's inflation is falling fast, just as global monetary easing picks up again. But it's not just about scarcity. Radiant is quietly shipping real tools. The Photonic wallet supports NFT and token minting using the Glyph protocol. The Muon Pay SDK enables RXD payments for websites and apps. Its smart contract system uses stateless scripting, making execution fast, scalable, and trustless, all secured by proof of work and fully on-chain. And unlike many projects, Radiant doesn't need to hype itself. It doesn't pay influencers, it doesn't chase listings, it just keeps building. Right now, attention is elsewhere. Crypto media focuses on EFTs, regulatory spats, and the next hot L2. Meanwhile, Radiant continues to grow quietly, adding features, expanding community tools, and strengthening its infrastructure. That may be its greatest strength, because when markets shift, when liquidity returns, when investors begin to hunt for real, undervalued assets, the fundamentals will matter again. Radiant doesn't ask for hype, it earns attention through design, fairness, and staying power. And when the tide turns, that might be exactly what investors are looking for. If rate cuts arrive as predicted, we may be entering into another cycle of expansion. Money will flow again, speculation will return, but this time, many are looking for assets that offer more than just short-term gains. They're looking for conviction, for credibility, for code they can trust. Radiant offers all that. It may not be loud, but it's consistent. It may not be mainstream yet, but it's built for when the world is ready. As the dollar weakens and systems built on easy money begin to wobble, proof-of-work assets like RXD don't just survive, they start to look like a foundation worth building on.